Hey guys, welcome back to another episode. In this video, we will be showing you the number one trading strategy that combines Fibonacci with price action. This will be the most important trading video you will ever watch, as we'll be covering concepts you won't find anywhere else online. Whether you trade stocks, options, cryptos, or currencies, this price action video is essential for all traders of all asset classes. We're also going to go through the massive Bitcoin and crypto trade our members and us gained on using this exact strategy so that you can do it yourself. Now, if you want us to release more videos more often, please click the like button, subscribe, and turn on the notifications bell so that you know exactly when we release new content. Now, here's a quick breakdown of what we will be covering in this video. So let's get right into it.
Fibonacci retracement tool and levels.
A topic we get asked to cover almost daily is how to use Fibonacci in trading. As you already know, we always read the comments to decide what topics to cover next. So right now, go to the comments section and tell us exactly what topic you want us to cover next. When we say Fibonacci, we are referring to the Fibonacci tool and Fibonacci levels. So why is the Fibonacci tool and Fibonacci levels important to use and understand? The Fibonacci tool provides you with trade entry opportunities at areas of value during a moving trend, as Fibonacci levels can act as a form of key support and resistance. And as you should know by now, support and resistance levels are areas where price has a high chance of reacting to or reversing from, all which again create high quality trade entry opportunities for you. Let's now access the Fibonacci tool. To access the Fibonacci retracement tool, click this button here on the left. Scroll down and click Fib retracement right here. Now to use it, click on the chart, drag the tool upwards, and then click again to lock it in. Then to the right, your Fibonacci retracement levels will appear. Now these levels are important because they are the most widely used Fib levels by traders and represent areas of value within a moving trend. So let's go through how to apply the Fibonacci tool right on the charts. Let's say you're analyzing this current moving uptrend. You have your run, pullback, run, pullback, run. As you already know, an uptrend makes higher highs and higher lows. So if you are analyzing this run here and want to apply the Fib tool to find areas of value to enter trades long at, here's how it works. You grab your Fib tool, click where the swing low is at the bottom of the wick, drag the tool to the top of the moving trend and where the swing high is. You will then see the Fib level percentages appear to the right. If price were to pull back to the 50% level, this would represent a pullback of 50% from the recent swing high here. And if price were to pull back to the 61.8% level, this would represent a pullback of 61.8% from the recent swing high here. So let's show this in the opposite direction and in a downtrend. You have your run, pullback, run, pullback, run. As you already know, a downtrend makes lower highs and lower lows. So if you are analyzing this run here and want to apply the Fib tool to find areas of value to enter trades short at, here's how it works. You grab your Fib tool, click where the swing high is at the top of the wick, drag the tool to the bottom of the moving trend and where the swing low is. You will then see the Fib level percentages appear here to the right. If price were to pull back to the 50% level, this would represent a pullback of 50% from the recent swing low here. And if price were to pull back to the 61.8% level, this would represent a pullback of 61.8% from the recent swing low here. Now, how do average traders traditionally use Fibonacci to enter trades? So, in an uptrend, when price pulls back to these fib levels, traders will enter trades long when price hits these fib retracement levels, because Fibonacci levels act as a form of support in an uptrend. And again, support levels are areas where price can potentially bounce and reverse from. Going the other way, in a downtrend, when price pulls back to these fib levels, traders will enter trades short when price hits these Fibonacci retracement levels, because Fibonacci levels act as a form of resistance in a downtrend. And again, resistance levels are areas where price can potentially bounce and reverse from. Now, let's get into the psychology of Fibonacci and why Fibonacci levels work. So the first reason Fibonacci levels work is because of herd mentality, or what can be deemed a self-fulfilling prophecy. A lot of traders subscribe to these fib levels in order to identify trade opportunities. To be more specific, the school of Fibonacci traders who look to take action at fib levels adds additional confluence to areas you are already watching for trade opportunities. And we'll dive deeper into this in the next section. And the second reason Fibonacci levels work is because Fibonacci levels actually represent areas of value during a moving trend. Or more specifically, you're getting in at a better price relative to where price has already been.
Thank you for watching my video. If you don't have an account on crypto trading platforms such as Binance, Huobi, CoinEx, please click the link attached in the description of this video to receive a $300 bonus and 30% OFF. All trading fees